Hello, everyone. Thanks a lot for your encouragement over our past videos. Today, we are going to talk about more clarifications with respect to residential association taxation. And CS Santosh Pai is here. He's going to give you more information, which is very relevant for this purpose. Over to Santosh Pai.
Thank you, Reginald. Hello, viewers. Back to FinTalk again on taxation on association of persons. Some of our viewers requested me to give more clarity on this topic with certain computation, with certain examples and all that. So I'm back again with some examples for your clarity, for more clarity on this subject in this important topic on taxation of association of persons, especially residential association, right? So,
Yes.
of course, the section deals, say 167B, we have two subsections, 1 and 2. And subsection 1 says where the shares of members of an AOP is undetermined or is not fixed or is not known, that is unknown, in such a case, 167B1 will apply, right? Suppose an AOP has a taxable income of 10 lakhs rupees, right? In such a case, since the shares of members is indeterminate, is not actually defined, it's not fixed. In such a case, we'll have to first apply MMR at 30%. So 10 lakhs rupees, you have to pay 3 lakhs rupees tax, right?
Yeah.
However, if any member has higher brackets, suppose instead of 30%, he has already his share is 40%, he's in under 40% bracket. Earlier scenario that was possible. Now for foreign companies and all that, other than domestic companies, they have to pay 40%, and for next year onwards is only 35%. Let's assume that one person, at least one person is having this, one member is having 40% tax. In such a scenario, this AOP, this 10 lakh will be taxed at 40%. So 4 lakhs is taxed. So instead of 30%, we'll have to pay 40%. That is, instead of 3 lakh rupees, we'll have to pay 4 lakhs rupees. Right?
Okay.
Here, this is 161B1.
Yeah.
However, this research association are all the registered body, so they are exempt from this. Right?
Okay.
So on that, on their income 10 lakhs rupees, taxable is 10 lakh rupees, then they need pay only on individual slab rate, right? If it is old regime, they'll have to pay 1,12,500. Under new regime, they need pay only 60,000 rupees. So which is benefits they can take from this AY onwards, right?
Okay.
So last financial year they can take. So instead of the 3 lakh and 4 lakh rupees, etc., they need pay only 60,000 rupees, of course, plus additional cess, plus cess, right? That's all about 167B1. Now I think this 167B1 is more clear with this computation, right? So now we'll go back, we'll come back to 167B2, the subsection 2. The subsection 2 says that when the shares of members of an AOP is determined, is fixed, is known, in such a scenario, we can apply individual slab rate.
Okay.
Right? So for 10 lakhs rupees, suppose there are 10 members in AOP, equal rights, so their share will be 10% each, right?
Right.
10%, 10%, 10%, 10%, right? Everybody will have, suppose equal rights, then everybody will have 10% share in that AOP, right?
Yeah.
In such a scenario, AOP, with suppose their total taxable income is 10 lakhs rupees, they can apply this individual slab rate, no doubt about it. So they need pay on that previous regime, old regime, 1,12,500, whereas under new regime, it's only 60,000. So they can opt this new regime and pay 60,000 plus cess. Clear?
Okay. Yes.
Since their shares are determined, percentage is determined of every member. Suppose any member has taxable income. Actually, the wording used is he has income more than the exemption limit. So suppose a member has is following this old regime in his personal taxation, so he'll get the exemption of 2,50,000. Basic exemption is 2,50,000 rupees.
Yeah.
Suppose he has more than 2.5 lakh more than 2.5 lakhs income under old regime, or more than 3 lakhs rupees under new regime. In such a scenario, this AOP has to pay MMR at 30%. So instead of that 60,000, as I said earlier, or 1,02,500, as I said earlier, the AOP has to pay MMR at 30%. So 3 lakhs rupees tax they have to pay.
Okay. Okay. Yeah.
It's
Sure.
just because the other person is having income more than the basic limit, more than exemption limit. He need not have any tax liability, right? Suppose in a new scenario, I told you that basic exemption is 3 lakhs, right? Whereas suppose his income is below 7 lakh, he need not pay any tax. So tax limit is not the criteria here. The only thing, whether he has income above the basic limit. If any member has, out of these 10 members, if any one member has base income more than the basic limit of 2.5 lakhs or 3 lakhs, as the case may be, then this AOP has to pay 30% tax.
Okay.
So 3 lakhs, right? Clear?
Right. Yes.
That's
yes.
clear. And suppose out of this 10 members, 2 members, they are having their tax bracket of 40%. That's proceed. They are having 40%. 2 members are having at the tax bracket, they are at the tax bracket of 40%. That's C, that's proceed, right? In such a scenario, that means 2% and 20%. So 20% of this income, 10 lakhs rupees, of 20% of that is 2 lakhs rupees. 2 lakhs will be taxed at 40%, and the remaining 8 lakhs will be taxed at 30% only. Clear?
Okay. Okay.
Out of this 10 lakh, 2 lakhs will carry 40% tax, 80,000 rupees. Remaining 8 lakhs income will be taxed at MMR of 30.
Okay.
Right?
Yeah.
So in that scenario, their tax liability will be slightly more, 3,20,000 rupees. Instead of 3 lakhs rupees, AOP has to pay 3,20,000 rupees. That is 20%, and I told you the 80,000, right? Plus 2,40,000, remember 30% on 8 lakhs means 3,40,000.
Yeah.
So now 2,40,000. So 3,20,000 will be tax liability of AOP as against 3 lakhs, as I said earlier, right? These three slabs, three scenario we have to look into, and under 1 system B2, we'll have to see whether we need pay only 60,000 or whether we need pay 3 lakhs or more, 3,20,000, so on, right? Now I think this is clear. But this 40% tax bracket from this assessment, next assessment onwards, this 40% has become now reduced to 35%. So next year, probably the 35% bracket might come. Usually it doesn't come, right? Usually foreign members may not be there in a AOP usually. If any member is a foreign company, then only this will apply. Otherwise, I don't think the present scenario, the tax rates are lower and lower. I don't think, but scenario it was there. So that's all your viewers. I think now it's very clear that 167B1 and 2 are very clear, and we'll have no more doubt from here onwards. In the last episode, I had some doubts on that. While presenting my episode, I came across one small mistake or some inadvertent, some mistakes, I think, but this will be the clear final figure. Thank you, Raghunath. Thank you, viewers, for watching this with this episode on FinTalk on taxation of AOP, especially registered societies.
Sure.
Thank you,
Thanks so
Raghunath.
much. Yeah, thank you so much. I think it's with the way that you have structured the scenarios and the calculation has become super clear and easy. Thanks for taking out time and clarifying from our previous episode.
Thank you, Raghunath, for anchoring this so nicely, and thank you, viewers, for watching this. I invite your suggestions, queries, for our discussion or debate, or WhatsApp, or this chat box, or so. Thank you, viewers. Thank you, Raghunath.
Thank you, everyone. Yeah, bye.